Hello everyone, thanks for joining us today. Today we are here to discuss about an entirely new asset class, crypto assets. Since 2009, since the time Bitcoin was invented, it came into existence to challenge the existing monetary system and to be a new form of money altogether. But from cryptocurrencies, this entire space has evolved into a new asset class altogether. Recently, we have seen a huge boom in applications like decentralized finance and non-fungible tokens as well. Along with that comes a lot of headache for regulators around the world as well. So to discuss how the industry has evolved, we are going to talk about cryptocurrencies, NFTs, and how reconceptualizing value is going to work today. So for this discussion, we have an esteemed set of panelists with us. We have Terence-Hari Fernandes, who's the co-founder and creative director at Lekh Haq. We have Lucy Corkin, the business manager at Rand Merchant Bank. And we have Lior Messika, the founder and managing partner at Eden Block. Thanks a lot for joining us today. So, Terence, would you like to briefly introduce yourself? Then we can go ahead with Lior and then Lucy.
Absolutely, I'm really glad to be here. My name is Terence. I am the co-founder of Lekh Haq, which is a culture impact company. We deal at the intersection of sociology and cinema. And we, about a few months ago, sold the world's first Indian short film live action as an NFT. So yes, I'm really excited to be here.
Sure. Lior, would you quickly introduce yourself?
Yeah, I'll try to be short. My name is Lior Messika, founder and managing partner at Eden Block. We're a crypto VC, one of the more dominant crypto VCs out of Europe. We specialize in really early stage innovation, at least in our side of the world. We've really been infatuated with the technology, and obviously NFTs have a big part of that. So I'm glad to be here and glad to have this conversation.
Thanks so much. So I'm Lucy Corkin. I'm a business manager, business strategist at Rand Merchant Bank, which is the investment banking arm of First Rand, which is actually the largest African bank by market capitalization on the continent. And as a more traditional bank, we are starting to look with a lot more interest in crypto assets, and trying to get our head around it and to see how we as traditional players can become part of this really exciting development in what it means to store and to transfer value and what that value actually is.
Sure. All right. So on that note, Lucy, let's start with you. So what does value mean in the context of these new digital tokens? So till now, Bitcoin and other crypto assets have been somewhat speculative in nature, but we tend to forget that these are network technologies as well, right? So how has the conversation and outlook shaped over the years from the traditional banking side of things as well, in your opinion?
Well, for me, what I think is so interesting about crypto assets is that there has been a sort of democratization in terms of how value is attributed, how value is stored, and how it is transferred. And if you look particularly in the context of the African continent, although this is true in other developing countries, we were talking earlier, one of the things that is so exciting about crypto assets is because it redefines how value is retained and how value is transferred. So if you were to take 10 years ago, if I had family in the UK or I had family in the US who wanted to send me money, in many cases sitting in South Africa, in many cases they would have to do a fairly expensive wire transfer, and they would and the value of, if it was coming in hard currency, that would be great. But in many cases, remittances are two developing currencies that have to get that have to get transferred into a hard currency as a method of transmission and then retranslated back again. So the friction costs of a transfer like that are incredibly high, and the store of the value, if it's in a developing currency is often volatile at best. And so one of the reasons why cryptocurrencies has become so important is because it provides a method or a means for many people in countries who are transferring money to friends and to relatives to be able to move value in a way that is almost frictionless, and move value that is not necessarily on the base of a developing country currency, which in many cases is incredibly volatile. We were talking earlier about the example of El Salvador, and one of the reasons why even though it had some teething issues, why it was such an exciting development is that such a high proportion of that country's household income actually comes from remittances, and those households were losing so much money just from the friction costs of receiving that money, and then also the effort and sometimes the inconvenience leading almost into the physical danger of having to go to the changing houses to actually receive that money physically. It was the practical circumstances of receiving that money meant that the eventual recipient actually had a much reduced amount through the friction costs of the transfer, but also of actually receiving that transfer of value. In the case of Bitcoin, crypto, or not just, Bitcoin in the case of El Salvador, but cryptocurrencies and crypto assets as a general asset class remove, at this point in time, because the situation may change, but remove a lot of those frictions that are inherent in a transaction, and so have created a huge amount of optionality for people that previously were very much disenfranchised from financial services, or experience enormous transaction costs in terms of sending, receiving, and storing value.
Sure. So Lucy, like she mentioned, that a lot of people are seeing value in crypto in Africa in terms of a safe store of value and for remittance as well. And in the past, there was this unanimous notion that the underlying technology, blockchain, is good, the token, or Bitcoin is useless, right? So it was unanimous amongst regulators. A lot of VCs and banks held that opinion as well. Do you feel that in the last 2-3 years that has changed and people are now seeing pockets of growth, especially from there's a use case where a token is required as well?
Yeah, so let me say a couple of things about that. I think that's a good question. What has changed? Fundamentally, nothing changed. So I just want to make that clear. Nothing about the technology has changed. Nothing about Ethereum has changed. The only thing that has changed is the public perception, of these assets. And so, what is the utility of Bitcoin? I think, we kind of understand that today it's not that good of a means of exchange. Maybe it might be at some point, but right now it's a great store of value. Why? Because nobody can penetrate it. Nobody can really mess around with that. And I think that, and obviously it's probably one of the more robust decentralized systems we've ever come across, we've ever created. And so, credit is due where credit is due when it comes to Bitcoin. But I think one of the more interesting things about this shift that you're describing is the fact that today many people are buying Ethereum, way before they even hear about Bitcoin, and that's happening with NFTs, right? People are entering this new ecosystem, this new internet of money economy, straight out the gate, because they want a new profile picture, because they want a scarce asset, that is translatable, in the Ethereum ecosystem. And I think that's fantastic because, again, nothing changed. I want to repeat that. Nothing changed. The only thing that actually changed is how, how tangible this value has become to communities around the globe. And I think, bringing this back to the fundamental piece, or premise of, why use decentralized systems in the first place, it's because they can actually retain, that value that we see initially over very long periods of time. Given the right incentives, right, those decentralized systems actually bring that value back to, users, communities, et cetera, et cetera. So, if we're looking at $4 billion, traded on OpenSea in August alone, right? We kind of understand that this is much more than a financial shift. It's actually a cultural shift. And so fundamentally, nothing has changed, but actually everything has, right? Because now we kind of understand, what it means, to hold an ape, People understand that there's actually a meaning behind that. There's a community, there's there's assets that are composable, that cannot be changed, that can only be built upon, right? And I think that that's really powerful. So my really short answer is, nothing has changed. I think what's really changed is our ability to translate that value into tangible assets, into tangible value. And I think, one of the things that we kind of forget sometimes is that what blockchains do really, really well is translate value and coordinate value in a way that we've not been able to do before, right? And so, on these systems, on the back of these systems, we're able to create new value systems, which are, again, translatable with code, but they're actually held by communities and by people that are creating those, basically social capital is now tangible, right? And so you've got these, hard assets like code and, dollar value behind that. And then you've got, you could say, more of the soft value that's being created around social capital, and the scarcity of assets behind that. And so I think that's a really, really interesting new phenomenon that we're now starting to experience. But it's been ingrained in our culture much more than our financial kind of you could say outlooks and economic policies. We're still behind on that, but now culture has spoken.
Sure. Interesting points, Leo. That brings me to Terence, because like Leo mentioned, the technology hasn't changed, but there is a change in the perception, and now people are looking at other use cases as well, right? You've been one of the first movers in one of those use cases, which is very popular right now, non-fungible tokens, NFTs. You have minted a token on OpenSea for a short movie that you made. Could you share with us, what inspired you to take that decision? And what has been your experience till now in this space? And what other opportunities do you see as an artist from NFTs?
I first of all found it extremely interesting the way Lucy and Leo have approached this, because they come from such an almost sidelong institutional perspective, and that is deeply fascinating. The way institutions are adapting, and also in the case of Eden Block, building and actively enabling this space to sort of grow. As an artist, I come from the fundamentally opposite position, but of course I am buffeted and deeply spurred on by these efforts, because of course you have governments that don't really fully grasp even what happened in El Salvador, which we mentioned briefly, touched upon. Breathing issues, definitely one way to put it. I mean, the people were up in arms for a few days in there, which is extremely bad for the optics of cryptocurrency. And I would stake myself a philosophical anarchist, and that would not be how I'd love that to go down. And obviously the financial individuals and the people in the regulatory seats will see it from one perspective. The artists hopefully will see it from another one, then they will meet in the middle, and the people will be ushered into an opt-in, consensus-based new world where we are no longer the whims and fancies of bigger, badder regulators. But when we Lekh Haq and when I showed up to the NFT, sort of, it was a party at the time. Thankfully, it no longer is really, and that is wonderful, because I mean, you want it to be a bit of a launch and an inauguration of sorts, and you want people to be like, oh, this is really fun, I want to do this a lot, so that you get those adoption numbers and all of that. But then today, it's people deride NFTs for one reason, the same reason they celebrate it. One, that it is, like you said, an exceptionally wonderful store of value and transparency. And then I love what Lucy says in terms of the value is based in the transparency of it. How do you share it? Right? The one aspect of money that we're coming to today, which is fundamentally, when we talk about value, it is when we talk about rethinking value, we have an opportunity, almost an invitation to, from the ground up, understand why we give each other money for services and goods. The best function of money, and an argument can be made, is just to simply give it away, right? And in that case, you have NFTs and cryptocurrencies showing up. NFTs obviously being a thing that's built on top of cryptocurrencies. As an artist, I look at the film that we did was boring, right? The film that we did isn't interesting. It was just it was a flag in the sand. It was a milestone, if anything. What's happening now, however, is you have artists like Sarah Friend, projects like Loot, for example, which are bringing dynamic NFTs into the fray, right? NFTs that are no longer just a picture, not just a punk or an ape on your screen, right? Which people still have trouble understanding fully, but of course, some people that get it, and it's incredible. But you have dynamic NFTs which can change on the basis of real world phenomena, right? They can change, for example, in the case of Sarah Friend's project called Life Forms, change when you share it with someone. How does money become more valuable when I give it away? An NFT can allow you to do that, right? While being a store of value, while being something valuable. And that is something that will, how do you regulate kindness? How do you regulate community, right? Now, when money allows you to become friends with someone, and not just money incentivizes you to use people. Fiat currency allows for a hierarchy. There's no other way to really see it. We have 120, 200, 500 years of experience of this, and use cases by the dozen. But NFTs in cryptocurrency, because it's based on consensus, of course, you will have bad actors, right? That shouldn't ideally be a bad case for it, because, I mean, the banking sector's had bad actors too, and that hasn't been a very good case for capitalism to have dissolved. So fair. Of course, you can work on it because you can build consensus-based models that, as an anarchist mindset would have you. We came into NFTs simply because we saw a world where the regulators, the big studios, the auction houses didn't get to say that I was valuable. People said I was valuable, as it should have been, as it will be, as it in some pockets of the world is today.
Sure. Really interesting points, Terence, over there. And like you rightly mentioned, earlier there was a lot of euphoria around the NFT space, and we had your CryptoPunks and apes and all those kind of things. People were ridiculing it as, having an NFT is same as having like a GIF certificate. There wasn't much value to it. But since then, a lot of other use cases have come up, and we are increasingly seeing the application of NFTs in what a lot of people are talking about in the metaverse, right? Like you mentioned, Loot, there's Axie Infinity, there's Decentraland as well, right? So, Leo and Lucy, I would like to have your thoughts on this evolving NFT space, right? Going ahead, when the euphoria dies down a little bit, what kind of use cases do you think will be left behind, and how is it going to shape up this entire metaverse that we keep hearing about recently? So, Leo, would you like to go first?
Yeah, happily. Okay, I have so much to say to this question.
Sure.
How's the metaverse going to change things? How are NFTs affecting the metaverse? I mean, what is their role there? Look, I think we kind of understand that, or let's just talk about the word metaverse for a second, because I think it includes a lot of different technologies, whether it's AR or all kinds of AI models that enable us to better experience the metaverse. I think that just to set the record straight, the metaverse will be based on scarcity and on real digital assets that you could say are dependable, and I think that you can only get that with blockchain at the moment, right? With decentralized systems, backing these assets up. And so if everything will be built on top of that digital scarcity, then the metaverse, you could say the infrastructure layer of the metaverse will have to be NFTs. And I think that we're seeing that with Loot. We're seeing that with many other NFT projects that have been able to even step out of the profile picture kind of you could say label, and transcend that into creating metaverses of their own, or bridging to other metaverses, right? I never knew when I bought my first my 5 apes, that I would be able to impersonate them, on a digital yacht club, on an actual yacht, in the metaverse, and play poker with my friends as an ape, right? And so I think that's becoming more and more clear, that you could say our relationship to these assets is going to become more and more intimate, and it's only getting closer. I mean, we cherish those pictures, and Twitter is now enabling us to identify ourselves as the actual holders of these pictures and of these JPEG certificates or GIF certificates. It's so much more than that, right? Because that is actually just the beginning of what owning an asset like that means. Because ultimately, if you want to play poker with your ape friends, the only way to do so is to actually hold that token and to immerse yourself in these worlds. And to be honest, just to be super clear, these companies that are now, building metaverses are even better equipped than Facebook, right? And other large incumbents, because they just raised millions or hundreds of millions of dollars from selling NFTs, right? And so today they're able to build these, and scale these metaverses up in a matter of months, in a matter of years, that really precipitates, again, the acceptance of this word metaverse, because of how foundational, these assets are going to be for that experience. And so just to add a layer on top of that, when you start interacting with, you could say, decentralized systems, you're already in the metaverse. Why? Because, being part of a DAO is a metaverse of its kind. Being a part of a community, right, that's distributed is already putting you, some kind of layer below, the surface. And I think that inherent relationship that we're now building with our assets is creating these new use cases. And so whether it's you could say interacting or connecting or integrating with DeFi protocols or with other Web3 applications, our NFTs or these assets will actually be the first ticket to create all of this innovation through, right? So just yesterday I launched a DAO for all of the mutants that came out of the Bored Ape Yacht Club. I don't know if you know about that. But we built this DAO, and we're now kind of playing around with derivatives, like financial derivatives of floor mutants, right? It's like, who would have thought? Who would have thought that based on these mutants, you can or these assets, you can now create new financial primitives. And I think that this is only the beginning, right? We've got these assets, and now we're building layers on top or underneath, and I think that's quite impressive. Because again, it all goes back to the same idea of these are the assets. This is the base thing that we've got. Loot is a great example. I mean, there's nothing there except there's everything there, right? And now everything is being built on top of that. And so yeah, I think this is where a lot of these assets are headed.
Sure. Lucy, you gave a good picture of how the real world is being mapped with the digital right now. With regards to NFTs, I wanted to have your thoughts on some of the trends that you have observed. I would also like to add, with regards to decentralized finance as well, that has also come up in a big way in the last 2 years, right? So with DeFi, what are some of the trends and actual applications that you have seen? If you could share us your perspective on that.
So I just wanted to say sort of a couple of words on the conversation that we had previously, because I think it's incredibly interesting that, so Lior was talking about the layers, or the whole world of new layers that has basically just opened up for us. I mean, for me, I think it's quite simple. What I find so fascinating about NFTs and about cryptocurrencies is that everyone sees this as it's a whole new world, but fundamentally what it represents for me is it represents a mechanism of trust and a mechanism of verifiability. And those two things, increasingly in a digital world where you can be anything you want to be or represent yourself as anything you want to be, trust and verifiability are becoming increasingly important. And that is, for me, that is exactly blockchain in terms of the technology on which all cryptos are based. It is trust and verifiability in a decentralized format. And NFTs are an even more tangible representation of that. And effectively what this means is that it opens up the possibility of living in a more decentralized way. Previously, I think if you take a sort of a political science approach to it, we were all very used to a command and control in some sort of centralized world. We were all used to state, to government, and to regulators in terms of how everything needs to be managed. And we are in this really interesting space at the moment where we have a political world that is still centralized. We still live in nation states with systems of regulation within these nation states, and then super regulatory bodies that create a kind of international sense of cooperation. But where there is this transitionary nature is we are increasingly having technologies and various bodies, be they corporates, who are starting to challenge that system of understanding, that system of control, and that system of trust handed down from the top. I mean, if you look at banks, banks' primary currency is trust. The reason banks exist is they were an institution that created trust for the store and transfer of value, which is what we were talking about earlier. That need will never change. We will always need to have trust and to be able to store value. Whether what does that is an institution that looks like a bank does today is something I doubt very much in the next 25 years. People will still need to do what my institution does, but it may not necessarily look like my institution does right now.
Yeah.
And so for me, that the ability to create trust in a decentralized context is for me the fundamental change that has happened. So it's exactly how Lior was saying, everything has changed and yet nothing has changed, because the fundamentals still exist and are still required, but what they look like is completely different. And I think that moving on, I think that again, to take sort of an African sort of perspective to it, the decentralization of these systems is what is incredibly empowering, because when you take a system, if I'm going to look at it from the lens of financial services or financial inclusion, let's use that word, because financial services is quite a specific set of things, and needs to be much more expansive now. That what DeFi does, or what decentralized systems of financial inclusion do, is they allow the inclusion of people for whom it was too marginal to include. And I've written about this before, is that suddenly when you have things like fractionalization of stores of value, fractionalization of currencies, fractionalization of stocks, there is suddenly an inclusion for people for whom previously the denominations were just too big, or their individualized value, or the individualized value that they as a single person or a single household represented just really wasn't worth it for the larger institutions. The ability now for financial services to slice and dice themselves and to customize them to the segment, or to the to the needs, let's call it the needs of various consumers of these financial services and of this kind of financial inclusion, is incredibly exciting. And it's basically opening up whole new worlds where people who no longer had who didn't have access to these services because they weren't created with these people in mind, now have access to them, and I think will become an incredible force to be reckoned with. Because if you go back earlier and look at, for instance, the advent of the cell phone, nobody thought that anybody in Africa would be able to afford a cell phone. So effectively, Africa as a continent was kind of overlooked as a potential market for mobile technology. Now, the cell phone penetration in most African countries averages about 65%. And there are more mobile money users on the African continent than sort of as a percentage of population than anywhere else in the world, because this technology effectively decentralized and fractionalized a service that was of intense value to the people who needed it, because they had not previously been included in formal bricks and mortar technology, from the perspective of fixed line telephony, or from financial services where you were required to travel, 30 kilometers in a bus in order to go and take or receive money. Sure. The opportunities that this opens up for, let's be honest, the majority of the world's population is really exciting.
Sure. Also, in brief, it can act as a tool for financial inclusion as well. And on the point where you mentioned that we've always been used to having regulators and states on top of us, it's not like regulators and states are going to go away, right? And increasingly, we are seeing a lot of scrutiny with regards to a lot of crypto applications. Most of them are on applications which are built on decentralized public ledgers, right? There is this entire enterprise private DLT space, but that is fairly, I would say, well regulated. But this entire new use case and this entire new world and market which is evolving from a public network, which is decentralized, designed to be out of the control of a singular third party, right? That poses a big challenge for regulators around the world. So, in your opinion, Lucy, let's start with you. Like, in your opinion, what could be like some of the holistic ways to go about it, regulating this space? Because by the time regulators could wrap their head around just cryptocurrencies like Bitcoin or Litecoin, we have this entire space where there are use cases on fractionalization, we have NFTs, we have DeFi, right? We have the metaverse that's being evolved. So many applications are built on top of smart contracts as well, correct? So, what, in your opinion, would be the most balanced way to go about regulating this?
Look, it's a tough one, but I think, I mean, to take a historical perspective, it's not the first time that technological innovation has run ahead of regulators. In fact, I don't think the reverse has ever happened. So I think effectively, I mean, that's why you have all these experiments with stablecoin, with central bank cryptos, because there are certain governments who are trying to understand what's going on. And of course, we have to be honest, cryptos represent different opportunities or threats for different governments, because not all governments are equal in terms of the global context. China has taken a very different stance to El Salvador, for instance. Yeah. And we all know why. And again, it comes back to that currency of trust. You don't trust what you don't understand. And so trust is fundamental. The change occurred with cryptos when more people started to trust what cryptos were and what they could be. That's not to say that we necessarily understand more about what they are, but there is just they seem to try, there's kind of this almost this global social contract. If more people are okay with it, then I must be okay with it too. I think there is precedence for international consensus. I mean, things like, telephone area codes or GPS. I mean, there is international precedent for cooperation on so-called public goods. And I think perhaps the first challenge we have is not everybody is convinced that crypto assets can be a public good. So perhaps that's the first challenge that we need to overcome. But there is precedence for that kind of international cooperation. So I don't think it's completely out of the park, but it's not going to be an easy road, because obviously this is new and it's happening so fast that it's very difficult to understand. But I mean, arguably, if we look at what happened in the global financial crisis of 2008, which was effectively the explosion of financial derivatives and what they could mean, and because there wasn't enough of an understanding with the regulators, there was this explosion that happened. So as much as, regulation is a challenge, it is there for a reason. I suppose some people would argue that the nature of blockchain means that it completely circumvents the need for regulation at all. And I suppose that is where the debate is going to be. The debate now is, what is the role of regulation, of regulators and regulation in a decentralized world?
Sure.
And is there one?
Yeah. So there's a saying, among the Bitcoin maximalist community as well, that you can't regulate math, right? So at one extreme, you have people which hold the opinion that it's self-regulated by code, right? There isn't much one could do about it. But then you have all these businesses which are built on top of these decentralized networks, right? Which can act as points of regulation, correct? So, in your opinion, have you seen some good practices around jurisdictions about how regulators are going about regulating this space? Would you share some perspective and observations with us on that?
No, I've not seen good practices, to be honest. Look, I mean, everybody here knows what I'm talking about. There's not a lot of clear guidelines, and at least as an investor, I've decided to stay very, very much focused on the innovation, and the regulation will just, will run itself out, in whichever way it will. I just cannot allow myself to take regulation in, as a considerable risk. Of course, we're a regulated fund, and we do what we can to not be in any risk, at least a regulatory risk. But to be completely clear, I think that the regulators have been completely mismatched and misaligned in terms of the incentives of the people that are creating this innovation and the incentives that are, of the people that are basically trying to shut down this innovation. And, just if you go back and you really do your checks, and I don't mean to point any fingers, any of the people that are still vehemently disregarding or alienating themselves from this new ecosystem, from this new economy, are the very people that are benefiting, from this centralization at the top. So again, I don't want to name any names, I don't want to point any fingers, SEC, whatever, but I'll just be super honest. We're not in a place right now of power. We're in a place of, I feel like all of us are really the underdog, and it's another like David and Goliath story. And you know what? I'm kind of happy to see that when China bans when China bans crypto, Ethereum goes up 8%, and I think that just speaks volumes as to the potential here, because you cannot shut down a truth machine. You cannot, shut down a decentralized environment. And I think this is where, the topic and the idea of anti-fragility really comes into play, which again, to me, just puts the regulation story completely out of my head, because I just know that based on this code, based on these technologies, and based on these properties that are being introduced here, through this innovation, I actually believe that regulation can't do much in the long-term side of things. So the companies that are built on top of these protocols and, building the on-ramps will have to be regulated. Again, I'm not living in some kind of, fantasy world. I think that we're all quite clear, that if banks want to offer, very, very competitive yields to their customers, they're going to have to plug into DeFi. They're going to have to plug into DeFi, right? Because right now, guess what? 20% APY sounds a lot better than 0.02. Okay, and in my mind, you're probably going to get that in DeFi, especially on Ethereum, okay, than anywhere else on the planet. And so at the moment, I think it's a gold rush to be the first regulated entity, be the first, you could say, on-ramp that knows how to connect between the real world and, this new crazy brave world that we created, which is still very much, ingrained within itself. And I think, those companies that build businesses and regulated platforms on top of this decentralized technology and decentralized assets are going to be the ones to actually bring, mass adoption forth. Because right now, I mean, the degens that are trading, NFTs back and forth, or even DeFi back and forth, they're not the ones that are creating adoption, or at least, leaving a lot of space for that. It's actually, players like Lucy, might I say, that are going to be able to bring this technology, in my mind, to the masses, to the hundreds of thousands, if not millions of customers that they are servicing. And I think that a lot of, that conversation lies with them in terms of a true leadership position to bring this into market, or to be completely left out. And I think the fact that Lucy's here is quite a strong statement that I don't think these guys are ready to be left out yet.
Yeah. So in short, it's inevitable. Terence, I was coming back to you only. So now you're a new entrant in this entire space, and there are concerns around DeFi and NFTs. There are regulators who want to declare them as securities as well. What's your opinion on that? Does that scare you? Like, what can it spell out for this, nascent, like fledgling industry that is just coming up?
This is actually a really interesting point, because we say regulation in the world of cryptocurrency and the blockchain like it's something that has worked in the traditional finance world. We reached the impasse of 2008. We reached Evergrande a couple of weeks ago because regulators were hand in glove. This complex financial system, and I don't really see regulators working in the real world, especially in developed economies. God forbid we talk about developing economies. where there is massive risk of fraud. So when a lot of people, but we accept that because again the word is trust, not consensus, and you can be forced into trusting something because we're born into a system. It scares me just about as much as it would scare if I were talking about film, for example.
Sure.
Piracy is not unheard of in Warner Brothers. I think they're aware that their films are generally pirated. I think they're functionally aware of this. The FBI and other individuals definitely let them know from time to time that theft is occurring. It's not like the old world didn't have any theft. It had theft, and therefore we want a new one. Therefore, we want new approaches to these notions. So as an artist, I'm not worried about IP law, because IP law is not something that is functionally helping me. It's helping the regulators and the studios and the people that get people like me in a room to make a bunch of stuff for them and sell it to the highest amount. Which, so why would you ask me about IP laws? They don't affect me at all. NFTs give my IP weight and ownership and accountability to but not just me. The people that worked on the film with me were all paid in cryptocurrency. We're about to launch the film as well through a model that we're now, through a protocol almost, that we're now calling the kindness model. We only sell 100 tickets, they ask us, right? We only sell 100 tickets, and Unlock protocol will potentially give you access to this film, but those 100 tickets that will be the floor, and then it will cap at that. But these NFTs will also have a function of being shareable. You have to now share it with someone else in order to get anybody else to watch the movie. What does that do to the world of cinema viewing, right? Let's not even talk about big things in the world like DeFi, right? Because what would an artist know about DeFi? But I do know that when I make something and an individual has to watch it, I'm not going to show them an advertisement 10 times a day in 20 different languages in 186 countries. I'm not going to play the music for them in every single bar and restaurant and every single street corner. That is coercion and bullying. That's not the sharing of value. That's not why anyone would make something. This is a world wherein individuals like you and me can have a chat, like Lucy, like Leo, can have a chat about building things that people actually want, and they aren't forced or coerced or bullied into buying, or just because they were born into it. I'm not really afraid of regulators because I don't have to actually worry about them. It's Lior and Lucy that have to actually worry about them. Sure, I get slightly annoyed when the market dips, but then we all just, like El Salvador, we just buy the dip, sadly. But I mean, I don't know what to tell you. I might not live long enough to see the metaverse actually be a thing, right? I don't know if I will. But I will live long enough to see people share kindness through an NFT. The second, it's not even good economics, by the way. What happened to Evergrande last week? Growth probably is the last fraud. Unrestricted, unmitigated growth. It's not economically feasible. Why do we still do it? Why do we celebrate it? Why do we report it like it's the next big thing? Why is the first of something important? I don't know. We had to do it because we wanted to do it, because other people needed to know we needed to do it. But the hierarchy of this, the decentralized world shows up when there isn't one person leading a charge. There are people that are called in. You don't opt out of systems as we are doing right now with pretty much everything. And people are saying, oh, no, you can opt out and other things, but we need to know how you did it and how you'll do it further, like they've been some sort of an expert. Sure, an argument can be made, but a very good one can be made in opposition to that as well, obviously. It's an extremely exciting time to be an individual for the first time in the internet, right? We had a bit of a dip there with Facebook and Instagram, the algorithm internet that Google essentially gave to us in SEO becoming a thing, and algorithmic lists of the whole internet becoming essentially automated lists of things that most people engage with, which again does end up representing, and rather forget who it represents, it keeps out communities and individuals and whole individuals from a conversation that simply can't anymore. They wouldn't. Why would you do that? The new world will be fairer. It will be more interesting, and I don't need to really worry about laws, because sure, they'll come after us. I mean, independent artists. I don't mean anybody else. But it's not really going to be very profitable for them. And if anything, if we know anything about revolutions, it's going to be really good. for the history books.
Interesting thought. I mean, the future is going to be kinder, and we can all agree that crypto is inevitable, right? So this was a great discussion. I really like talking to all of you guys.